Hello traders, let's look at the charts. As you can see here, we're now sitting on the 50 moving average, and that is the key level. It's a resistance level, because the 50 moving average on H4 is the 200 moving average on H1. Now the supply zone, this supply zone here, hasn't been broken yet. I know that I haven't extended it because I feel that it's going to be broken. If it will only be broken if a new candle opens above the high of the supply zone. So I'm just waiting for that. If it does go there, and if the new candle does open above, then probably what's going to happen is that we're going to go to this level. Oh dear, let's do that. Going to go to that level there. So I do have a blue banner which I'm excited about. Placed a nice 9.98 trade, but I did place it late, unfortunately. So I placed it when the second candle opened above the 8 EMA. So that's not right. Let's do it over there. Okay, cool. So this was candle number 1 and this is candle number 2, and then I placed my trade. So I did get into it a little bit late. So I placed a 9.98 trade. Now that's not a revenge trade. That is a strategic trade placed when my rules were met to open a new trade, and we placed it strategically and at that lot size based on the size of my capital and the fact that the price of gold had gone so low. So there is a stop loss on that trade, $2 above the entry price, in case the price goes lower to the levels of 44.87 and even lower, which is 43.97, where the wick is, where the price wicked down into this demand zone and then immediately shot up. So we may revisit that zone. We'll look at the DXY just now. So my blue banner is looking fantastic, and the reason for that 9.98 trade was to create my profit and loss to be blue, and that way I can use that profit as liquidity to be opening up trades, more blue banner trades when there is a reversal and then a flip, and use that blue to create profits instead of using my capital in the account. So it's a very clever strategy. That's the profit for today, and I'm very excited. So that's what's happening, and let's now look at the DXY. So I did say that the DXY was going to improve in value, and I think that the price of the DXY is going to go to that level there. This is going to the 200. This is going to then, obviously, when that happens, gold will drop. That's why I'm feeling that we're not done yet. This uptick is obviously a retracement on gold because it's undervalued, and the reason that gold dropped, in my opinion, was because of that demand zone on the DXY that was triggered. This demand zone here, which goes back to 2022, which nobody is talking about. Everybody's talking about Nash and Trump announcing Nash and the JP Morgan closing their positions. Got nothing to do with it. The reason gold crashed, okay, was because they moved the dollar down into this zone to trigger their orders, and then it immediately shot up. Well, not immediately, but I mean, it took some days. So the institutions moved the price down into the zone. And I actually think that the government got involved and said to the banks that if you move it lower, we're not going to give you bailouts. So those orders triggered. It's very possible that that is what happened. So we're waiting now for the price of the DXY to increase, and then the dollar will drop again. And that's why I've got that stop loss. I don't want to be caught with my pants down on that big trade. And maybe the price will come down here, maybe the price will come down there, and then I think we're going to see all-time highs. That's what I think is going to happen. So stay tuned. We'll see you soon.